In this video we are going to talk about AT&T Analysis. So before starting this video, please like this video and subscribe to our channel for future updates. Following the announcement of a dividend cut following the AT&T Discovery merger, we have seen intense panic among income investors rushing out the door and dumping their shares of AT&T. In the last two trading sessions, the company's stock has dropped by 8%. We clarify why this hysteria has provided a fantastic buying opportunity. AT&T agreed to purchase Discovery, Disca, via a reverse Morris Trust transaction. T would effectively spin off Warner Media and all of its properties into a new corporation that will be owned 71% by existing T shareholders and 29% by current Disc shareholders. The market's initial response to the merger was overwhelmingly positive, before fears set in over the fragmented reduction, which occurred without regard for the big picture. The dividend will be cut in half. CEO John Stankey said on the conference call, "For AT&T and our partners, the deal is supposed to be tax-free. AT&T will obtain $43 billion in cash, debt securities, and the retention of some debt by Warner Media. AT&T shareholders will receive shares representing 71% of the new company when the deal closes in mid-2022, with Discovery shareholders receiving the remaining 29%. At that point, we plan to reset our dividends." T expects the new dividend to be 40% to 43% of free cash flow, which they estimate to be more than $20 billion. This equates to around $1.12 per share. It's also a safe bet that the new business won't be paying dividends anytime soon. As a result, from an income perspective, there would be a decrease, and that is the primary reason T is selling off. However, the dividend is not the only factor that determines worth. Since their company is struggling or they don't have enough cash flow, T isn't cutting the dividend. Instead, T is vastly improving their capital allocation and offering their shareholders a beautiful deal that they can cash in on in a year or keep for the long term and see substantial growth. Let's take a look at the profit that this transaction generates. NewCo is a company based in New York City. T shareholders would receive a 71% stake in a new venture, or NewCo. What is the value of that? According to pro forma 2020 figures, NewCo will generate $12 billion in adjusted EBITDA in 2020. Don't sell AT&T. AT&T, the great, the good, and the ugly. AT&T. Dividend cut and Discovery merger mean it needs to define its goals. It's worth nothing that NewCo's sales would be significantly higher than Netflix's, NFLX. NewCo will be the streaming industry's behemoth in terms of size. NewCo will have something for everyone in terms of content. Warner Brothers has been a top 2 film studio in 11 of the last 12 years, with a slew of scripted TV shows and exclusive sports rights. Disc, on the other hand, contributes the most common, unscripted content on the market today. With over 200,000 hours of content, they far outnumber their competitors in terms of sheer volume. For example, NFLX has approximately 30,000 hours of content. The material will be owned by NewCo, which is the real kicker. NFLX has been dealing with the fact that when content providers such as Warner Media launch their own streaming services, their distribution deals with NFLX will expire. This is what has prompted NFLX to spend a growing amount of money in creating its own content. Warner Brothers has been making content for over a century, so they have a leg up on the competition. NewCo will be fiercely competitive in terms of content, and will most likely outperform the market. They have the benefit of sheer quantity and variety. What would be available from NewCo would have been regarded as every channel on your cable package 30 years ago, and would have cost well over $100 a month. Estimation. Enterprise value, EBITDA, EV/EBITDA, is one way to value a business. NewCo will be worth $182 billion at 13 times its expected EBITDA of $14 billion in 2023. Netflix is currently valued at 16 times earnings before interest and taxes, EV/EBITDA. To be cautious, we'll say it's worth $154 billion at 11 times EV/EBITDA. After subtracting $58 billion in debt, the equity will be worth $96 to $124 billion. T shareholders would own 71% of the company, worth $68 to $88 billion. That works out to $9.50 to $12.33 per current T share. And that's just the beginning. The new service would experience rapid growth and may eventually outgrow Netflix in terms of subscription numbers. Legacy T. Meanwhile, Legacy T, excluding Warner Media, remains a massive corporation that will be far more concentrated on wireless and broadband services. T will still generate more than $20 billion in free cash flow after the split. That works out to $2.80 per share. Take a look at T's historical FCF price. T's market capitalization has plummeted to levels not seen since the Great Financial Crisis. Ironically, many have blamed T's acquisition of Time Warner for the downturn. If that was the case, T's price should have risen to 15 times its current price. Outside of recessions, T traded at a multiple of 10x FCF prior to its acquisition of Time Warner. So, how much is T worth now that he's been spun off? Let's say the value stays the same as it is now, which is 7 times. Let's say 10 times on the high end, which is still a rather conservative figure. This equates to a price range of $19.60 to $28. Legacy T. They will receive shares in NewCo worth $9.50 to $12.33. NewCo might theoretically be worth a lot more, but we'd rather be cautious. Second, assuming that the legacy business continues to trade at valuations similar to those seen during the GFC and COVID, the legacy business will be worth $19.60 minus $28 per share. Investors have a great opportunity to purchase the shares at very attractive valuations due to the market hysteria over the possibility of a dividend cut over the last 2 days. T is currently trading around $30 per share. T also plans to pay out the entire $2.08 payout, which currently yields 7%, for at least another year, giving investors at least one more year of large profits. After the spin-off, the dividend will not be modified. A customer who invests $30 today will receive the following benefits. Dividends of $2.08 a year will be paid before the contract is completed. When the spin-off happens in about a year, 2 stocks, AT&T and the NewCo, will be worth $35 to $40 billion. That's a 20% to 40% total return over the course of a year. It's also likely that the NewCo will trade at such a high price that an AT&T shareholder who sells his stock in the NewCo, when it first begins trading or a few months later, and reinvests the proceeds in AT&T will not lose any money. This offer has not only piqued our interest, but it has also piqued the interest of others. Bank of America estimates that AT&T's stock could rise 50% from current levels as the value of its newly created media empire with Discovery is unlocked. Conclusion. The market can be an emotionally charged environment. Many investors would be alarmed by a single data point. Many investors were fixated on the dividend and read an article that only revealed one side of the coin, causing unnecessary panic. One-sided research, unfortunately, can be harmful to investors and sometimes leads to needless losses. We're long AT&T at high dividend opportunities, and we've decided not to sell since the beginning. When the market was in full panic yesterday morning at open, I personally added to my spot. If the price drops any lower, I'll gladly purchase more. According to our conservative review, investing in AT&T today, or adding to your position would yield 20% to 40% returns over the next year. Are you feeling lucky, according to high dividend opportunities? You don't need luck to succeed, but being a member of the world's largest and most exciting group of income investors and retirees increases your chances significantly. Regardless of market fluctuations, our income method generates high returns, making retirement investing easy, straightforward, and less stressful. What are your thoughts on our video? Please let us know in the comments section below. If you enjoyed this video and would like to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.